Let's have a look at how you would answer the questions in the gross income examples. Okay, so I've just put the example up again. It's Mama Tembu who owns a guest house. She's owned it for 9 years. Someone's offered her 3 million rand for the guest house in June 2019, and she decided not to take the offer. She kept running the guest house, and then there was a redevelop committee, and redevelopment plans were announced in July, and during August she obtained a valuation and then was approached by a large company to sell her guest house for 8 million rand. The sale was included, and Mama Tembo sold the guest house in December 2019 and received the money. So how would you decide if this 8 million rand should be included in her gross income or not? Well, first of all, for a for a receipt to be included in gross income, it must comply with all the requirements of the definition of gross income. So if you were answering the question like this, you need to list the requirements saying a total amount of 8 million rand in cash was received by Mama Tembo during the current year of assessment. Yes, it was on the 19th of December 2019, which is in the current year of assessment, and it's not of a capital nature. Well, that we don't know yet. So it could also be included in gross income as a special inclusion with one of the paragraphs. So we always start with the special inclusions, and we say, okay, well, the sale of a business is not a special inclusion. So you need to know all the special inclusions, what might be included in gross income in terms of one of those paragraphs, but the sale of a business is not. And then we've been through each of the requirements. Total amount received by or accrued to and during the year of assessment have all been met. But we weren't sure of a capital nature. So the inclusion or exclusion of the money actually hinges on whether it's of a capital nature or not. So how do we prove capital nature? Well, first of all, we need to look at Mama Tembo's intention. And it seems from the information that she had no intention of selling the property in the past. So nothing over the last 9 years has indicated that she wanted to sell it. She hasn't been trying to sell it, and she's been operating as a guest house. We'll have to consider whether she's had a change of intention, and it doesn't seem that she changed her original intention between purchasing the asset, the initial offer, and the counter offer on the sale of the property. Also, just because she sells it for the best possible price doesn't mean that she's changed her intention, and it also doesn't show that she's embarked on a profit-making scheme, which would then make the receipt of a revenue nature. So it would appear that her intention is of a capital nature, and therefore we need to also look at the objective factors. There's quite a lot of objective factors, so you can just pick one or two where the information is available in the question. So in this question, it doesn't tell us about how she purchased it, how it was financed. It just says that she disposed of it. The question does tell us that she held it for a long period, which was 9 years. It wasn't just bought and resold as a scheme of profit making. Continuity, she continued to operate as a guest house over all the years. She wasn't buying and selling guest houses during that time. Her occupation is running a guest house. It's not the buyer and seller of guest houses. The question doesn't tell us about change in ownership. That would normally be of a more complex nature than an individual. The nature of the asset disposed is a capital asset. It's a sale of a guest house, which is a business. The reason for the receipt of the 8 million rand was the sale of an asset. The legal nature of the transaction is a sale. It's not any other form than a normal sale. And the operation of the business and carrying out a scheme of profit making. So she didn't enter into a scheme of profit making of buying and selling guest houses. So it seems that based on the objective factors seem to support that her intention was to sell a capital asset, and therefore because it's of a capital nature, it will be excluded. The 8 million rand will be excluded from gross income. And that's the logical way that you approach a gross income question. Let's look at the second example and see we're going to approach it in the same way. So the second one is a rally driver who came second in a race, and his prize money was paid directly to a charity organization of his choice at the end of December 2019. So like any gross income question, we first of all need to say for it to be included in gross income, it needs to meet the 4 requirements: a total amount in cash or otherwise received by or accrued to in favor of during the current year of assessment, not of a capital nature. Or we need to look and see if it's a special inclusion in terms of paragraph A to N, because that will also include an amount in gross income. So prize money is not one of the special inclusions, and we can see that the total amount was, there is an amount, and it was during the year of assessment, and it's prize money. It's not the sale of a capital asset, so you can see it's not capital in nature. So the inclusion or exclusion of the prize money in the rally driver's gross income hinges on whether he received it or it was received by the charity. It was paid directly over to them. So received by means to receive an amount on your own behalf or for your own benefit. Now, in this case, the rally driver didn't receive the amount because it was paid directly over to the charity organization. However, the definition also includes the term accrued to, which means that you're unconditionally entitled to. So the rally driver participated in the race and he won the prize money. So he was unconditionally entitled to the prize money, and it doesn't matter what he does with it after it accrues to him, it's still accrued to him. So that requirement has been met. The charity organization only received the amount as a donation or gesture from the rally driver after it had been accrued to him. So in this case, the prize money clearly accrues to the rally driver before it was paid to the charity, and it's therefore included in his gross income. Okay, so when you're approaching a gross income question, remember, always go through the requirements of gross income, check that it's not a special inclusion, and then argue each of the cases and clearly indicate which ones is the problem in the gross income question and deal with that in the majority of your answer.